Namaste and welcome to another edition of the Bharatvaarta Weekly. It's been a rather eventful week and we have a lot to discuss. Of course, the union budget was presented by the Honorable Finance Minister. The Adani group continues to suffer with them pulling back their FPO. All of this and more on this edition of the Bharatvaarta Weekly, where we cover the news and events that matter to you. If it's your first time here, we publish episodes on politics, policy, and culture. We do 2 or 3 episodes every week. And if you are a returning visitor and you like the content we produce, then don't forget to rate and review us. It'll help more people discover our content. Hey Nirav, hey Abhishek. It's a bright and sunny Saturday morning here. How are things with you, Nirav?
All good, all good. Here it's like dark and cloudy and rainy in Singapore, but yeah, but all
Yeah,
good,
so
all good.
Abhishek and I are enjoying some
Good weather.
summerish sort of a weather. Yeah, yeah. I mean, we haven't had much of a summer in Bangalore, so this is actually, it feels nice. It feels nice and warm. And last week, we published this very interesting episode on geopolitics with Shashank Mattu, who writes for the Mint. Abhishek, what do you think about the episode? Could you call out some highlights?
Yeah, so I think the guest is a very young foreign policy analyst and journalist. And I thought he shared some excellent insights about, India's foreign policy, how he has been covering it, how he sees policy in actions, what are some of the threats and opportunities that he sees for India in that space. So he came across as a very matured commentator, despite his, I would say, he's very young, but he's definitely a very matured commentator, and I really enjoyed listening to his insights because he's someone on the ground, right, who is out there speaking with policymakers or diplomats, not just of India, but those with whom India is, transacting. So I would definitely recommend our listeners to check it out.
Yeah, he's very prolific as well. He writes these rather interesting threads on Twitter. Right, I highly recommend that you folks follow him. All right, with that out of the way, let's get started with the news and events of this week. The budget was announced on 1st February. On Wednesday, Finance Minister Nirmala Sitharamanji presented the budget for the year 23-24. She said that the Indian economy is on the right path and is heading towards a bright future. She added that this was the first budget in the Amrit Kal. In a big boost to the economy and to taxpayers as well, she announced major income tax changes, massive hikes for defense and railways, and a big increase in capital expenditure across the board. Nirav, Abhishek, the first budget in the Amrit Kal, as the finance minister said. What do you guys make of it? Could you call out the things that really matter to all of us? Nirav?
Yeah, hi. Okay, so first is budget has two parts. One is it's a statement of accounts that where the government is going to spend money and where the government is going to receive money, and then what is the net borrowing, right? So that is in India. We also have it that wherever the money is being spent, there are new policy changes, right? So where are we going to spend money? I think the government has done one very sustained thing is incremental spending on capex, right? A lot of detractors are saying that increased government capex is reduced by each PSU is actually doing less capex, and India is not meeting its disinvestment target. So PSUs have to give bigger dividends. So fair thing, but I think at the margin, over 8 years, the government has continuously focused more and more on capex. Now, earlier was a lot of investment on roads. This time, there's a lot more investment in railways as well. We've done away with a separate railway budget, so combine this into one. So that is pretty good. Then there are like spending in like areas of defense, in agriculture, etc., right? So maybe I won't go into the details that side. Then the second part is how are we getting the revenue? So revenues comes predominantly by taxes, and now taxes both they haven't good thing is they haven't tweaked on any of the GST slabs or GST etc. Right? I think that's a good thing which is going on incrementally. I think last year we were at a run rate of 1.5 lakh crores. I think this year they're budgeting 1.65 lakh crores a month, right? So that's like a good net run rate. This is what we should look at, right? That every month, what was budgeted and are we getting there, etc. Because that is what pays for this thing. On the income tax, another thing, what had happened is earlier they had increased too many slabs. I think if I remember correctly, at one point of time there were just three slabs, so 10, 20, 30. Now then slowly went to six slabs. Another thing they've done is they've reduced the number of slabs from 6 to 5. They've increased the threshold for paying income tax, but they've removed a lot of deductions, right? So, but you still have the option to keep being under the old regime, depending if you have. I'm not a tax expert. I'm not an accountant, but if you have a lot of tax-free investments under ATC, or you have a big HRA or a home loan, I think maybe the older regime is better. But if you see towards it, what they're trying to do is they're trying to simplify at the margin. They are trying to reduce the tax burden. So even the very top slab, there's a lot of pushback earlier about the surcharges. So the surcharges for people earning more than 5 crores, that has been reduced as well. But hopefully that leads to increased compliance of tax, right? So instead of people getting into tax avoidance schemes. And I think one of the things which a lot of people mentioned was removal of tax exemption for insurance linked investments. I think more than 5 lakh rupees a year. So what had happened recently is a lot of money was going into insurance linked investment schemes, which were basically like a debt mutual fund or an equity mutual fund investment, but with the insurance plan attached. And this saw like a lot of money flow to insurance companies. But I think the government has kind of said that, okay, the payout in case of death is tax free. But if it is just a pure investment return, then it is taxed, I think, beyond a threshold of rupees 5 lakhs. It is taxed at an income tax marginal rate. So what we might see is a lot of the investments, or like a lot of people who are trying to tax optimize their savings, will move to mutual funds and equities and debt. So maybe we see that, maybe we see more growth in bank deposits instead of this. So these are the few broad things what I saw. I think another one is so basically the headline, our fiscal deficit increased a lot during COVID, right? So last year was 6.4%. Now next year they're saying 5.9. They want to glide it back to like 4.5% in 2 years. So we might see like 5.9 to like say 5.2, 5.3, and then maybe 4.5 if everything goes fine. So yeah, like I think key one was 45 trillion or 45 lakh crore is total spending, and 10 lakh crore is capex, which is up 33%. So I think these were the very big picture broad highlights which I felt were there. But yeah.
Yeah, it's good to see also that the defense budget has increased by about 13%, right? And this will go towards buying new weapons, aircraft, warships, and other hardware. Abhishek, one thing that we heard about this budget was that in a budget that is just preceding what will be an election year in 2024, there weren't a lot of populist measures, right? I mean, it was still very conservative from that perspective. Do you agree with that? And if so, what could be the rationale?
Yeah, I mean, whether you are a critic of the government or a supporter, you have to concede that, they have been fairly, I would say, responsible custodians of the economy. And definitely, I mean, you can always argue about demonetization, but if you leave that aside, the government has been a very fairly conservative, stable custodian of the economy, right? And it does populist measures from time to time, like, for example, you can talk about the extension of the free food grains that they did announced a few months back, right? But by and large, the budget process was, as you said, free from populism. And I mean, Nirav covered most of the parts, but just to reiterate, very big push on capex, right? Which again, curiously enough, got criticized because some are saying that's an indication that the private sector is still not stepping up. But the point, what Nirmala Sitharaman mentioned in one of her interviews is that, look, either way, this is a time of great opportunity for India, right? Which means that it's time to push on with, good quality expenditure, right? Whose returns will be, something which the country will get over the next decades, right? With good quality investments in whether it is roads, highways, railways, airports, and so on, right? So I think the capex push is obviously something to be commended. The second thing, what also Nirav talked about, is the fiscal deficit, and obviously it had ballooned up to 9% plus after the pandemic, right? And so every year, some substantial effort has to go in, to bring that back, maybe half a percentage point every year, right? So zero point 0.5 basis points now, or 50 basis points now in this year. from 6.4 to 5.9. And so, with capex going up, what they have done is they have tried to slow down the growth of revenue expenditure, and that is a little controversial. So, it got criticized a bit. For example, the Mahatma Gandhi Narega, right, scheme allocation has gone down to 60,000 crores, which is like a 21% decline from last year's budget estimate, right? And so that was a point which got picked up by the opposition, in the sense that what does this signal is, does this mean that we will not have demand for Manrega, or whether you will actually sort of say no to people, because legally you can't do that. So that will be an interesting thing to watch how it works out in terms of rural employment opportunities and how much there is demand for Manrega. The other thing is another thing which I would say is commendable is the estimates overall seem to be very realistic, right? I don't think anyone can sort of complain too much that government is taking some unrealistic estimations, right? So for example, the nominal growth assumed is only 10.5%, right? Which is quite doable, right? You probably going to finish somewhere between 6 to 7% of real growth, and the balance being inflation. Ideally, all of us would like it to be much higher on the real side, but I think at least from a budget point of view, the estimations are quite fair. The tax to GDP ratio has been maintained at about 11.1%. So, our tax, so despite all the sort of losses that the government will suffer in terms of, let's say, personal income tax due to the increase of rebate, or lowering of rates at various levels, the government will make that up with a growing economy, right, and with more tax flows that way. I think if there are a few things which people are saying that this budget sort of had a miss on, or a little disappointing, was, I think, the disinvestment picture. I think we are not progressing the way we thought we would do in the last few years. Obviously, the Air India sale was a big one, but on the rest of it, there does not seem to be that much progress. And the other thing which some commentators are talking about, there is still no mention on cryptocurrency. I don't mind that too much. I think in spirit, the things have been communicated, right, to Indian investors. And so I think overall, as you said, it's a non-populist, very sort of stable budget with a big push on capex. In general, another thing Nirav talked about, the GST slabs. I think we have to now take it in this way, that the GST modifications, if any, will not be through the budget mechanism, right? It is through the GST Council that we have to understand that any changes that will happen is through a different mechanism. So basically, in that sense, a lot of the indirect tax related, say, drama that used to happen in budgets is now taken out, right? And it's shifted out to another place, the same as the railway budget, right? Like those were two big things that people used to sort of look at from budgets. And finally, on the taxation thing, I think the fundamental philosophy now seems to be that, look, we have these two regimes. The old regime still gives you benefits of investments into certain areas, right? Like the 80C deductions or house loan, etc. But those will be at a higher tax rate. So while the new tax regime is all about you as the consumer or the taxpayer deciding for yourself where do you want to put your money. In some sense, it is a bit of an incentive to actually do more consumption, right? You will on the margin have lower tax rates, but you won't get benefits of certain investments. And I think basically it is like putting the power of decision making in the hands of the consumer. We are not going to play winners and losers right now in terms of where we want the money to go. You want to put more into equity, that's fine. You want to put more into consumption, that's fine. But you will get a sort of certainty in terms of lower tax rates. And possibly in the future, I can see them, if this government continues post 2024, that they'll phase out the old tax regime, and stick with the new tax regime. Now, the big hit out of this is obviously the insurance firms, right? Where I mean, I'm not a big fan of the ULIP structure in itself. It's neither a great mutual fund investment nor a great insurance instrument, right? It was like a hodgepodge of two, which people were sort of attracted into primarily for tax savings, and that's never a good reason to do investments. So, while obviously there will be side effects of any decision, I think overall the idea that we leave the savings and investment decisions to consumers is, I think, a good thing.
Yeah. No, I think from my perspective, I love that the government has decided to extend the public digital utilities to the MSMEs as well, with this whole DigiLocker facility and so on. So, we often talk about ease of doing business and so on. I think with this, that will get a massive shot in the arm for sure. And there were also a lot of spends on energy as well, clean energy, green energy, this whole transition that we've signed up for as well, right? Startups often, ask about simplifying these investments, regulations around that, the angel tax and so on and so forth. But I don't think we've gotten anything to that effect. Interestingly, the government announced an agri tech accelerator and a fund, right? Which is pretty interesting to see actually. The fact that they're encouraging technology in these domains, right? These very conventional domains. So yeah, overall, I think there's plenty to talk about in this budget. I would say, right? I mean, we've spent the last 15-20 minutes talking about it. So certainly an interesting budget, one would say, right? So yeah, kudos to the government on that. Meanwhile, the Adani Group crisis continues as the company, continues to bleed in the stock market after a successful full subscription of their FPO. The company pulled it back and announced that they would be refunding all the investors to save them from the market volatility. SEBI has asked stock exchanges to check for any unusual trades in the Adani stocks. RBI has asked the banks to reveal their exposure towards Adani. And meanwhile, opposition parties are drumming up the issue among calls for a detailed probe into the group by RBI and SEBI. Well, Nirav, the crisis continues. We've seen, 40-50% of the market cap being wiped out in a matter of weeks. Do you see any end in sight? What does the future strategy look like?
So let's look at it this way, right? That Adani Group was raising $2.5 billion, so 20,000 crores through the FPO, which it wanted to raise, out of which about $500 million was to pay off debt, $1 billion was for capex, $1 billion was the group to think about like other investments or like uh, as they please, right? So this was there. If you look at it, Adani Group, they've grown rapidly. They know, probably they know that the shares are overvalued. They've used the overvalued shares to buy out other companies like ACC Ambuja Cement. They've had JVs with Total, the French energy giant, with Wilmar, the agri commodities company, right? They've acquired Haifa port in Israel, right? They have a JV there, Adani Ports. So, was the company stretched too much? Yes. Was it over levered? Yes. And that is why it was raising this kind of FPO, right? So, this was a weak moment where Hindenburg kind of made some accusations. Most of the accusations are on the governance side, right? It's not saying as much as it's a accounting fraud or it's showing that things on its balance sheet don't exist, etc. Right? So it's been talking about that. It's caught it at a vulnerable time. The shares did fall quite a bit. The FPO they managed somehow over the last weekend to get the whole FPO subscribed by Monday evening, but the markets fell a little more, right? So after the FPO, post FPO, the price fell another 30%, which would have been really bad for all the investors. The major investors was IHC, which is an investment company from Abu Dhabi. A lot of the Indian other billionaires, right? Like Ambani's of Reliance, Sunil Mittal of Bharti, Jindal of JSW, right? So those guys also were probably investing. I would say I can think about like three reasons, right? One is that they don't want contagion to their own shares. If like one biggest conglomerate shares fall, I think there would be a domino effect. So you want to kind of backstop that. Two is possibly, and this is my speculation, I have no insight, is this is a tacit agreement that Adani was growing too big and was acquiring a lot of other businesses, probably to stay away from their businesses, that not to enter telecom or retail or steel or whatever, maybe, I don't know. And third one is that you want cooperation, because each of these at a very high level are kind of customers of each other as well, right? So For infrastructure, you need some steel. There is like telecom involved, etc., etc. Right? So I think those kind of things where you're trying to cooperate, prop up someone, that was there. But
It was
they would all lose money.
it was like
Yeah.
that Avengers scene, actually, when
Yes, yes, exactly, exactly, right? So now you don't want to screw over your friends who are coming to you in times of distress. So he pulled off the FPO saying that the market volatility is too much, will return probably at a later date. So that has happened. Now the shares have been moving like really wildly. A lot of people, it has attracted all the day traders' attention.
yeah,
I think on Friday, Adani Enterprises, which is a flagship company where the FPO was there, shares fell 35% before jumping up to like plus 5% on the day, 5-6%, and then coming back to I think little change. I think 1600 to 1000 to like
amazing.
back to six.
The day
Yes,
traders are having a field day, right? I mean, every
yeah,
one of the Adani shares, even the Adani ports, Ambuja
yes,
Cement, etc., right? All of them
yeah.
are just yo-yoing around like crazy
Yes,
right now.
yes.
Yeah.
And what has happened during the week? I think their debt, a lot of their dollar debt, they have $8 billion of offshore debt, $22 billion of local debt. So that debt was trading at about 70% of its face value. So they have some maturing next year. So that's kind of like a assumption that will he be able to refinance, or is there a jump to default? And maybe over this weekend we might see, or soon, maybe not this weekend, I don't know, once the shares stabilize, there might be some private placements with the people who are investing in the FPO. So take out the retail part, but all the other anchor investors, there could be some sort of a private placement where he gets the money to repay the debt, which is maturing shortly. And also, Adani's businesses, right? A lot of them are cash flow positive businesses, whether it is ports, whether it is electricity distribution. So Adani Transmission, they have like suburban Mumbai electricity distribution. They have power plants, right? And cement business, which is all used in construction, apart from infrastructure, a lot of other private construction as well. And ACC, Ambuja Cement are kind of the leading brands. I would say Ultratech and India Cements are the other two which I can name from the top of my mind, right? So all these are cash flow positive businesses. Maybe they're all very debt heavy. So yes, for such kind of businesses, when your cost of borrowing is low, you have a massive competitive advantage over your other competitors, which was true for Adani a week and a half ago, right? But now it has completely changed. So let us see. Maybe we might see some strategic divestments that could happen. But Total has actually come out and said that they are not concerned about their investment in Adani. I think there's a lot of push into like. So the other thing is, uh, Adani is in a way like very critical to Indian infrastructure. So they've got the bid for the new Mumbai airport. They've got the bid for Dharavi redevelopment, the biggest slum redevelopment, right? I'm being from Mumbai, I keep a lot of local news. I follow that carefully. There are a lot of other projects, specifically green hydrogen, right? The whole hydrogen and ammonia chemistry and like that kind of investments. So I think a lot of these are beneficial to a lot of people. That doesn't mean that we shouldn't tolerate an Enron type fraud, right? So yes, if it's an accounting fraud, etc., etc., it should be dealt in with the law of the land. But from the surface, doesn't seem so. Second thing is, a lot of the PSU banks and the private sector banks, right? They have very limited exposure to Adani. There is some chance that maybe now Adani borrows locally at a higher interest rate to pay back the older debt, right? So kind of to remain solvent. We could see that. And yeah, so I think over this time, maybe, as in last week, I thought the worst was over, and then I've been proved wrong. But maybe we see we are closer to the end. Does it mean that Adani shares are going to bounce back? They've lost about 47 or 50%, give or take. Let's say they've come down to half. I don't think they reach scale back to the highs again, right? Maybe we see it trading in a range, and I think the whole group will be all hands on deck, try to focus on getting the things. Probably they've bitten off a lot more than they can chew. Maybe they divest something, and focus will be on execution of the existing things over expansion. I like after going through such a stressful cycle, I think that is what it will be. Other thing is that unlike say IL&FS default, right, or a financial sector default, say like Lehman Brothers, right, like in the US, for a non-financial company, there are less uh, what you would call is less spillovers. Given that the exposure of Indian banks is quite low, so it's not as if that the banks get hit, then they cannot lend to others, and there's a contagion, right? So if Adani does default, it's bad for the shareholders, bad for the debt holders. A lot of them are overseas. It is bad for the projects which are under completion, etc. Right? And maybe there should be good recovery value where somebody else will pick up those assets cheaper. But a lot of them are operating assets, right? Mundra port is the biggest port in the country. They've got five other ports. I think one, I think in Mangalore, some on the east coast, etc. Right? They're also building Calcutta, like Howrah port, another port over there. So in West Bengal. So what you have is you have six ports, you have a couple of airports, you've got utility businesses, right? All of these are like operating businesses which are running. Are they overvalued? Yes. Would there be some possibly strategic buyer at a slight lower valuation? Possibly. I don't think that these businesses, underlying businesses, are going to cease to exist. And Adani and his family directly, indirectly, they own almost 72, 73, 74, or as Hindenburg says, maybe even 80%, because they own a lot through offshore entities. So they own a lot of shares in this. Maybe they'll have to dilute their holdings. So I think that also probably at the right price, you could see some buyers. So yeah, that's what it is. Let's see. It's very interesting. It is a very interesting saga. A lot of people don't realize the size and scale of this group, right? And and the kind of like very audacious sized goals what they have as well, right? So Gautam Adani is not a very regular public speaker having a public persona. He tried to change that. He came on, I think, a TV show Aapki Adalat, right? So trying to change the sentiment against him. So that is there.
Yeah,
And now
but that
finally,
that one was before this crisis,
yes,
actually. About
before this,
yeah.
yes. The thing is, it's Adani is a very polarizing name, depending on which side of the political spectrum you are on, and basically, a lot of opposition they'll have a field day over here. I think for a person to become like so rich, almost worth nearly $200 billion, he's not gotten there one overnight. It's like been a 40-year journey, and you don't get that rich without being smart enough, right? He's probably seen a lot more ups and downs earlier, but they were not this scale or not so much in the public eye. As a betting man, I would bet that Adani comes out of this. Maybe it's a good thing. Some ego purchases like NDTV, etc., might have been along the way as well. But everybody course corrects, everybody makes mistakes, everybody moves ahead, right? So it's just that the scale is mind-boggling. That's all. So let's see how it all pans out. I hope that Adani does well, and all the projects which they undertake, right? A lot of them will be beneficial to the common person. So that is what I'm hoping for.
Absolutely. And I think, yeah, I mean, he's been at it for almost 4 decades, right? I mean, people don't realize that in that sense. Neerav, what do you make of, Citigroup, for example, halting any margin loans to Adani? And then, Credit Suisse has also stopped accepting any bonds and so on.
Yeah,
So,
yeah.
what do you
So
make of
okay,
those?
so oh no, no, so that is fine. So that I'll tell you what is there. So Adani Group, they have $8 billion of US dollar bonds when they could borrow cheaper overseas, right? They could borrow cheaper overseas. They use that option. So these bonds, a lot of them are owned, you could say, like by hedge funds who kind of borrow them on own them on margin. So if Adani bonds are paying you 7 or 8% interest, and you borrow overnight daily like 60-70% of the face value, at like, so you lever up your return. So that is hedge funds. A lot of the ultra high net worth guys also have margin loans. So I would say broadly, Credit Suisse will have a lot of ultra high net worth people who buy these bonds and on margin. You have Citigroup. Difference between stocks and like debt, right? Debt is like it moves with a jump without any exit in between. So it kind of collapsed 30% of its face value. So it's just a prudent decision. Same things have happened in like whenever there is any other group under stress. So that happens. This is the banks kind of reducing their exposure because say if Adani were to default tomorrow, then you have a loan against a defaulted asset, and then that means that your other customer might also default, right? So it is just de-risking. I think this is seen in China. We've seen like large bankruptcy of Evergrande, which is the most popular one, or like companies which were under stress. One is Huarong. So this is a standard market practice. I think everybody's trying to like look at what their exposure is and try to minimize it, right? So I think what it is, from colloquially speaking, I think a lot of people who have been hit, they seem to be holding on, but I don't have like a big insight on this. So let's see. I think when debt trades at 70% of its face value, it's neither here nor there. It is, if it's trading at 30-40%, that's a default level. If it's trading at 90% ish, you say, okay, they'll just refinance at a more expensive level. So 70% tells you that they cannot borrow again overseas right now, right? You cannot borrow at like 25-30% margin. It's uneconomical. So maybe you'll have to refinance locally when these bonds mature. So it's like in a nice no man's land, and depending where things go, it'll either go back to something 90 something or maybe to 30-40%. So yeah,
Do you guys hold any Adani shares?
I don't own any Adani shares nor bonds, right? Though a lot of people are saying the trade is okay. This is not investment advice. Bharatvaarta is not an investment show.
I checked my portfolio the other day, so I didn't have anything.
Yeah. So the trade is Adani Ports and Adani Enterprises have futures outstanding. So you could short the shares and buy debt, assuming that Adani will have to sell more shares to pay back his debt, right? So do what he has to do, and maybe he repays. That is, you're betting on the survival of the company, but the stock's falling a bit. But it is not investment advice. You could lose a lot of money on both legs, yeah, because stocks could bounce back. You get stopped out there, and then you could default eventually. So, but yeah, this is what a lot of people in the financial markets have been talking about. But yeah, all disclaimers, all disclaimers. And
Yeah,
this
yeah,
is my
standard.
view, not my employers, not Bharatvaarta's, and this is not investment advice.
Yeah, I mean, all standard disclaimers apply. I held a little bit of Ambuja Cement shares, right? And it's a good business generating cash and profits, just caught in the crossfire. I was sitting on about 40% profits on that, 40 or 50% profits, I suppose, before this whole shit show started. And now it's just yo yoing around every day, 5% down, 5% up kind of a thing. So anyway, I mean, let's hope that we can really move on from this, and I hope that Mr. Adani recovers from all of this stuff, because I think the work he's doing is certainly important. That brings us to the end of the Bharatvaarta Weekly. If you hung around until now, and if you liked our content, don't forget to rate and review us. I know I keep saying this again, but it's really important for others to discover this content as well. So kindly help them. Share it with your family and friends if you think it's of value. But until then, from Neerav, Abhishek, and myself, thank you so much for joining us. We'll see you next week. Stay safe, take care, and Jai Hind.